Yep.
Well, hi, ladies and gentlemen. I'm Chris Weston. I'm head of research here at Pepperstone. We're going to go through. We're going to count down going into the Australian CPI number. I'm going to bring in Cuddy Gantz. He's one of the premium client managers here at Pepperstone, and also a bloody good technical analyst as well. So I think he's going to give a bit of perspective on what's going on here. Let's say bring in screen share. So I just need to move that out of the way. Then we should be able to see. Cuddy, how you going, mate? You well?
Yeah, I'm good. Thanks, Chris.
Good
How's
stuff.
everything going?
Yeah, going well, going well. So I think the relevance of the show, and hi everyone in the chat. We've got a few people putting out some chats, which is great to see. Um, what we're doing is we're looking at the situation here because this is important. As you can see here in the middle, you've got the Bloomberg monitor. Now, I think this is important because what we're going to do is we're going to go for a few charts as they break. What we've got, if I look at the pricing at the moment, the way you've got to look at this is the current effective rate here in Australia. That banks can borrow from is effectively 6 basis points. We know the cash rate is 10 basis points, but the rate that you actually want to be looking at is 6 basis points. Okay, if we have a look at what's priced into the interest rate market, and I don't have a real-time price unfortunately for Australian rates, they are 15 minutes delayed, so it's going to be pretty hard. Is we've got the implied rate about 15.8 basis points. So that really implies that we've got about 11 basis points of tightening being priced in for the May meeting. So if you divide that by 25, which is what, the kind of increments that you traditionally get, 11 divided by 25, and what we've got, a 44% chance of a rate hike in that May meeting. So why is this CPI imprint important? It's just ticked down a little bit now to a little bit less. So we've got about 15 basis points there, the implied rate. So from that, we can work out what's being priced in there. So yeah, it's just ticked down a little bit to 9 basis points now. What we are seeing is the idea if this CPI number comes out super hot, then that market implied probability of a May hike will probably swing above 50%. So it becomes a live event. That May meeting that we're going to see on the 3rd of May becomes a live event. That's why this is important, and that's why we could see a sudden jump up there. So we're pricing a 30-40% chance of a rate hike as it stands at this moment, given everything that we've been seeing in domestic conditions and inflation expectations. But if this inflation number comes out hot, then obviously that implied probability becomes above 50%. That meeting becomes very, very interesting indeed. So what are we expecting? CPI, the market consensus, this is the median amongst all the expectations from sell-side economists, is this to tick up on headline to 3.5% to 4.6%. We know that the RBA sets policy by what they call the trim mean number, so it takes out some of the really high volatile measures, and they can see that expecting to go from 2.6 to 3.4%. Now, obviously, the RBA have a range that they like to try and keep the inflation in trim mean between 2 to 3%. So obviously, after what we saw from the Reserve Bank minutes, that they've said that the developments have effectively brought forward the timing. If that comes out at 3.4% on trim mean, and the trajectory continues to look like it's going to go higher, then the RBA should act, and they should act now, either by looking to raise the cash rate by 15 basis points in this meeting, or perhaps even wait for the June meeting and raise by 40 basis points to get the cash rate up to 50 basis points. That's where we are at the moment. Let's have a look at the year-on-year number, and let's have a look at the sort of range of estimates that we've got coming through. We've got 1 minute to go through. So once we see the reaction there, so the high estimate is Westpac at 4.9%. Okay, so we've just seen the number coming out. Okay, so we're just seeing a bit of movement coming through. Let's have a look at what we're seeing. I'm going to take this into a much... Okay, so you've got the short-term... you can see the short-term moves here coming through, 5-second chart, Aussie dollar. So you can see pound Aussie is obviously, there's big moves coming through in the Aussie. It's obviously going to be hotter. Let's go back to the reaction. My reaction, trim mean 1.4%. This Bloomberg terminal is taking its sweet time to come through. We've got the CPI number 2.1%, so 40 basis points hotter. That's significantly better, hotter than expected. You can see we've got the year-on-year number. I can't see it coming through on the Bloomberg terminal at the moment. It's taking its sweet time, but I'm seeing 5.1%. So again, that's 20 basis points higher than the sort of, there you go, 50 basis points above. That is a big number. The RBA should now look to raise rates in the May meeting. Let's go to these charts, and what we'll do then, we'll bring Cudsy in to have a look at the daily charts and some of the longer term time frames. But what we've seen, let's have a look at what we're seeing in the Aussie dollar. No real reaction coming through in that one at the moment. We're not seeing any kind of major reaction playing through there, Cudsy. Are you seeing anything at all?
At the moment, not much is happening. Obviously, I think the market is just waiting to react.
There we go.
So what I'll do is I'll bring up some charts.
Let's have a look at what we've seen the reaction. I'm just going to go through the spot Aussie dollar price there. So we've seen that going from 71.50 up into 71. So about a 21 pip move to the upside in the Aussie dollar. Let's have a look at Euro Aussie. Yeah, so that's gone from 148.83 down into 42. So not a major move there. Let's have a look in front end rates, because I think that's probably the best reflection of what we're seeing there. You can see that going from 231 up into 235. So about a 4 basis point increase in Aussie 2-year Treasury rates. As I say, I've got delayed prices on this, so we're not going to see this reflected in Aussie interest rates. But I would now imagine, given that we've got about a 4 basis point move, and these CPI numbers are very, very hot indeed. As we know, the year-on-year change up, well, certainly going to 5.1%. If we have a look at the trim mean number at 3.7%, well, what's that now in terms of actually the hottest level that we've been seeing really since June 2009. So in my opinion, that either the RBA now are going to raise by 15 basis points in the May meeting despite the election, or they're going to hold off until we've got the wage data coming through on the 18th of May. And the employment data coming through on the 19th of May, and they're going to look to raise by 40 basis points. But that May meeting now is live. So let's go through the charts, Cuds, and let's have a look at it. Have you got some ones that you've got saved there?
Yep, I've got some ones. Would you like me to open it up?
Let's have a look at loads. So where have you got them? There you go. So which one? Let's have a look at your Aussie dollar one to start with there.
Yep. Okay,
so you can see that we've come back to this form of breakouts there, and so you've got down into these sort of 71.18 levels. Obviously, there's been a lot of risk coming out the market. We've seen an all-out risk aversion move coming through in the session we've just seen, and that's really impacted the Australian dollar as that kind of risk proxy. But we're now back at 71.70. Now, I'm not sure, Cuds, if you trade off daily charts or shorter term time frames. So why don't you just talk to me a little bit about, now that we've seen the short covering coming through, what do you expect to happen in the short term here?
I think in the short term, obviously, Chris, as you already know, the market likes to just find those liquidity pool areas where institutions and banks usually have their orders sitting. So in the short term, I just expect to see a spike, which will obviously be targeting to sort of like find liquidity and flush out all the weak hands and all that. And then obviously later on, the later sessions, once we get into like London session and US session, that's when we see this sustained move for the day. There's a couple of favorites. I think pound Aussie has been a pretty good favorite this week, especially after it pushed into 1.78. I think on the daily time frame, we sort of like saw an inverse head and shoulders pattern.
There you go. I've just brought it up. Can you see that now?
Yep.
Okay, so you got that. You got the inverse, the head and shoulders pattern threatened to make a move up into 180. I think you've got that there. We sort of failed back come back to test the neckline, and we had another establishment into 179. But we've come right back now. This strength that we're seeing in the Aussie on the CPI number that we've been going. Do we go back here? What's your view? Is this neckline even still worth looking at, or is this now? Do we just focus on this kind of former area support into 175 now?
Nah, so I think on with the pound Aussie on the daily chart, you can see a massive rejection of that 1.78.
Yeah.
And on the daily chart as well, it's pretty clear that it was sort of like trading it was sort of like pulling back into 1.78 in a rising channel. And the move that just came out now is seeing like a partial breakout of that channel. So it'll be interesting to see if that the sellers can sustain that pressure lower. But then definitely pound Aussie has been heavy, so that's definitely one for the radar as well.
Yeah. The other one that you've got to look at is the Aussie now, which if they are going to raise sooner because these CPI numbers, the way you look at this is high inflation G10 currencies against low inflation G10 currencies. So you're looking at euro. Oh, euro's got quite high inflation, but let's have a look at Aussie yen. As a sort of that parameter that we've been seeing there, and just see what the setups come through. It's difficult to be long Aussie yen in this market because people have been buying yen because of kind of the risk off mantra that's played through in these policy settings. But what do you see in this situation? We've obviously seen a strong downtrend from 95.50 coming to 90 the figure, or 90.50. We found some support coming through, but we're looking for a few people to sell it into 91.50. For me, this is people looking to sell into rallies regardless of what's happening in domestic conditions. This remains a risk proxy, but would you look at longs in this situation? Do you want to take the time frame down? How would you play this right now?
I think with the yen, it's pretty difficult at the moment because we've seen a massive extended move on the yen across all the pairs. And if you look at the Aussie yen on the bigger time frames, for example, like the weekly, you can see how much it started to sell off from around 96. And with the data that just came out now, we're sort of like sitting around the 92 area handle. So it's pretty difficult to go long at the moment because it really hasn't shown anything to the upside. It might just be spiking up to find liquidity around that 92 area and see a continuation lower based on those higher time frame biases, especially because yen has been heavily extended. And normally pullbacks are imminent after such extended moves in the markets.
It's interesting here. Now we've actually got a few sellers kicking in. If we have a look at front-end yields, as I say, which I think are the best proxy for rate expectations over the short term. We've gone from 231, as I say, up into 236, so about a 5 basis point move up, which would therefore show that what's being priced in terms of rate hikes has gone up. But it's certainly not getting away, considering just the extent of what we've been seeing here. You would probably say that the front-end yield should be pushing up a lot more than that situation. Let's have a look at further down the curve. Because this is what the Aussie dollar will be looking at very, very closely indeed. And I think this is really interesting after a bit of a spike up in yields there, about 4 basis points. We're back to exactly where they are. So it's almost like this CPI number, regardless of just how hot it is a bit of a non-event in the market's eyes. So let's go back to the Aussie dollar crosses and just see how we've been trading on the back of this. Again, look at the Aussie dollar. I mean, we were trading 71.50, got into 71.70. We've come back, and again, it's just following that 10-year Treasury that we've been seeing in that regard. Let's have a look at interest rate pricing, see if there's been any kind of change there. Not really. There hasn't been any kind of effective change for that. Let's have a look at the rate structure. Okay, so if we actually go in there, we can actually see the May contract now, which is actually more up to date than what we've been seeing in the other one. We can see the May contract now sitting at 19.5 basis points, so we're up 3.5 basis points. So if we use that now as a proxy for where we are, let's divide that by 25. So we've got a 76% chance of a May hike now being priced in. So it's interesting that the Aussie dollar hasn't really responded too much. We'd have a look at what's priced out further down the curve. We've got still rates are still terminal rate is now 3.5% or 3.43%. But we've seen a bit of a repricing there. So this May meeting now is live in the market's eyes. There is a higher probability than not that the Reserve Bank come out and hike rates by 25 basis points. It's interesting that we've seen a little bit of a bid coming through in short-term rates. 10-year rates haven't moved whatsoever, and the Aussie dollar has given back a lot of those gains as well. So an interesting one there. Very, very strong numbers that we've been seeing, but as it stands at the moment, the market's not getting too carried away. That May meeting, from what we've been seeing, is more likely than not in the market size, despite the election, that the RBA are going to come out and raise rates. What you'd also look at a bit later on is just what's being priced into the curve. Are they bringing interest rate hike expectations forward and not pricing in more in the back of the curve? I think that's probably what the Aussie dollar's looking at. But it's an interesting one. Let's go back to the charts for just final thoughts there, Cuds, before we wrap it up.
Just have a interesting one is Aussie US. If you could just bring that up.
I've got a 5-minute chart. Do you want to change it to a slightly
daily chart?
Yeah.
Yeah, so with the Aussie dollar, you can clearly see because it's obviously been driven as well lately by the cruising, how the US dollar has just been on the rise. But you can see clearly that we had a sustained rising channel that we broke out of a couple of days ago, last week, and at the moment we're sitting in a very very critical area. So if we see a sustained sell-off today, especially in the later sessions, we're obviously heading towards the month close as well. We could end up seeing a very bearish month close, and then obviously next month, once the month opens, if you just go on the monthly chart, you can start to see how heavy it's looking at the moment on the monthly.
We've got a monthly outside reversal at the moment playing through, so obviously that still needs to close through through these previous lows of 71.65 before that's confirmed, and that may not well happen. But I think that's obviously shows that the bulls tried to step in, they got rejected. And
exactly.
A bit of a change of structure playing through on the longer term time frame. So let's go back to the daily there. So we have broken through that downtrend, the uptrend. Sorry, the sellers have continued to push that one up. What I think is really interesting here, Kuds, is that you've got a snap back into this former swing low that we've been seeing. The bears have rejected that one as well. So again, I like what you're thinking. Let's see how Asia trades this towards the end of the day. Let's see how Europe trades this when they come in as well. These are strong CPI numbers. But you'd probably be looking more tactically at taking the risk on, risk off thematic out of the equation that you're getting with the dollar, because the dollar's strong on risk aversion flows at the moment, and probably playing this against something that has a similar vibe, a similar thematic. So Kiwi dollar, Kiwi Aussie CAD would be another one there as well. So rather than going for your risk proxies, your Aussie yen, your Aussie dollars, if we want to play a CPI number, it'd be interesting. I'd probably be watching the slower beta ones where you've got that same thematic, the Aussie Kiwi, where you can see Aussie Kiwi has pushed higher and has sustained that move there as well. So if you want to express a bullish CPI number, probably better off doing it against the Kiwi dollar, and also potentially against Aussie CAD. Let's have a look at Aussie CAD. The commodity producing countries there. You can see we've chewed for a lot of that those negative there. It hasn't held the gains, but it seems like Aussie Kiwi is probably the play there as well. Quick question before we wrap it up. In terms of you, in terms of managing clients, there's obviously very high volatility in this market. If we go into the VIX, for example, we've seen that now pushing into 33%. On the cash VIX there, so you can see we're getting back into these range highs. What are your clients doing? I mean, you sort of manage a book of high value clients here at Pepperstone. What are people generally doing in these high volatility times, in these uncertainty times? How's their trading behavior changing?
So obviously, Chris, there's a lot of volatility in the market at the moment, with all the global economic, global political, geopolitical events happening around the world. So the high premium clients at the moment, there's still a lot of activity in the markets, particularly in the past couple of weeks. We saw a lot of activities across the commodities, especially gold and things like that. But then people are being a bit more risk averse, I'd say, sort of like in some instances they dial down their position sizing, or for people that trade automated systems, they've been sort of like in some cases putting them on the sidelines or adjusting certain parameters and things like that. But most people have been trying to take advantage of the volatility that's there, because we're in special times. The market is being driven by a lot of things. Obviously, the war, the Russia and Ukraine, that's played a huge role, especially on the euro currencies and things like that. So it's been pretty good so far with the clients.
But I'd expect people to be looking to take the position, so trade. They've seen range expansion coming through. Trade with wider stops. Take the position size right down in this situation. Perhaps be in front of the screens far more readily. Not want to hold positions when they're not in front of the screens. Obviously, automation changes that situation. But is that what you're saying? You're just saying more sort of higher frequency activity, but taking on more risk, taking the position size down accordingly with the range expansion, with the higher vol that you're seeing in the market there.
Yeah, definitely. Because a lot of people that do swing trading at the moment, because of the market conditions, it hasn't really been conducive. So there's a bit more of a high frequency, just in and out day trading sort of like happening. Because the market can be up 300 pips in one day and then just undo those 300 pips the next day. So swing trading and holding has been, especially for people that trade automated systems, it's been a bit tricky.
Yeah, right. Yeah, just leaving this one off now. So we've got 20 basis points. The May meeting now is priced. So 20 out of 20 basis points of tights out of 25. We'll see you guys. I'm gonna chain out, and thanks Kudzi for being on the show. Some good information there. I just want to leave this one by because we've got the May meeting coming up on the 3rd of May, the RBA. We've got 20 basis points being priced in for that meeting now. So I think it's pretty clear to say that the market is on balance is not too concerned with the election. They don't see that as a game changer, and the dynamics that we've seen from this CPI number means the RBA need to get the cash rate up sooner rather than later. The bigger point that we got to touch base on is whether the market changes their perception of what we call the terminal rate, and that is how high the Fed, so the RBA rate can go before it reaches a peak. At the moment, the market is seeing that around 3.3%. I think that's way too high myself. I think that's probably closer between 2 and 2.5%. But the market expects the terminal rate to be above the neutral rate. The question is, what is that point where the terminal rate can be? And that's what we're going to assess at the end of the day. What is the market pricing of how high the RBA cash rate can go? At the moment, as I say, the market's pricing that around 3.3%. Has that changed? I think that's where the Australian dollar could do. Are we seeing a situation where the market's just bringing forward rate hike expectations, or are they pricing more in across the curve? So that's something we'll watch. But we'll be back for more live events. Probably the next one is around the Fed meeting, so stay tuned for that as well. So see you next time.
Thanks, Chris. Thanks, everyone. See you next time.
Bye-bye.